Welcome, guys. So, are you a beginner stock investor, or if you've been investing for years and want to improve? I'm going to show you today how I pick stocks and I go live daily. So that way you can see what I do in real time and unfiltered as well. So that way you can learn how to pick winners, avoid losers with less effort in less time. So in this video today, I'll be analyzing a micro nuclear reactor company, Nano Nuclear Energy Inc. on NASDAQ, and I'll be doing a first pass of the stock as well. So if it meets my criteria, it'll be back for a second pass. And if not, today I'll just move on and I don't waste any more time. I've invested over 2,000 hours learning from the world's best stock investors. Then when I say best, I mean guys that have long-term verifiable track records and they beat the market for decades. So guys like Warren Buffett, Charlie Munger, Howard Marks, Seth Klarman, Allan Mecham, Nick Sleep, etc. All right, so let's crack into it. Share the screen. And let's go. So my breakdown is pretty much go to the primary information. So all I've done is typed in Nano Nuclear Energy into Google with annual report after it, and it's brought up the investor relations page. So we'll run through that. And all I'm looking for is anything that sticks out, or ideally the annual report and the latest one. So I can see here, it's got the January investor presentation, earnings release, Form 10K. So I'll click on that one. Nothing that jumped out at me straight away on that page. And I don't mind reading the PDF version. So it's a US listed company. So it has a Form 10K is how they refer to or what they name. The annual report for the SEC on the second page or third page in usually got a table of contents. And a couple of key things that I'm looking for is the management team. So I want to see that it's actually got a bit of a breakdown of how much skin in the game the guys have. And I want to see who the CEO is and any other key people in the business. And then I also want to go and see the financial statements just to see if this company is actually making money. So my main purpose is to pick long-term stocks. All right, so you can see here, we'll just jump straight into this. And make that a bit bigger for us. All right, so directors, executive officers, and corporate governance. You can see here they've got a table here showing the names, age, and then their position in the company. So I've got here James Walker, 42. He is the chief executive officer and director. And JU is 45, and he's the president, secretary, treasurer, and chairman of the board of directors. So there is another key person that we want to know who's actually, I guess, the chairman of the board, and a few other people within the business. So as a first pass, usually just want those key people. It's actually got a biography, so a little bit of their background. So for James, who's the CEO, he's been a director since 22, has over 17 years of engineering management experience. Let me just reset the page so we can see the edge. Experience across various industries, construction, mechanical engineering, nuclear engineering. Since 2020, Mr. Walker has served as the senior executive at Ares, where he's responsible for the construction of plants, purchases of land, operations, marketing, financing, safety regulation, compliance, and shareholder relations. He's currently or concurrently serving on the board of directors of several small cap publicly traded companies in Canada, including Bayhorse Silver, Xena Resources, and serves as a consultant to List. So his background, strategy of lithium energy products, yada, 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 grant submissions. So prior to joining Lithium from 13 to 16, was an engineering project manager for the United Kingdom's Ministry of Defence. Okay, so between 22 and 13, Mr. Walker was seconded and worked as a nuclear physicist at Rolls-Royce, leading a project to model various configurations of Rolls-Royce's zero-power reactor using probabilistic physics software to digitally replicate real-world behavior. All right. So lots of bits and pieces. Let's keep going. So JU is our founder. Has been our president, secretary, and treasurer, and chairman of the board since 22. All right. Yu has been the chairman of the board of directors at a few different things. Served as the chief executive officer and chairman of the board. All right. Analyst in corporate and investment banking on Wall Street in New York. Okay. So they've got a bit of experience. They don't have, in terms of CEO experience, James Walker is pretty new to the role. Doesn't have a long background of, I guess nothing in here really talks to anything of, I guess, evidence, but we'll see how we go further on. Like I said, I haven't done much research or any research on these companies that I look into, just trying to hit it cold, as cold as possible. So we're going to check out the financial statements. And we'll go for a scroll. All right. So we've got the balance sheet. We've got cash and cash equivalents on our assets portion. You can see the increase from 24 to 25 shows they've got, well, pretty much nearly 180. Yeah, there's no reference. So that's just $203 million compared to 28 million the year before. So they've got a cash injection, and they have been, property, plant, and equipment has increased substantially as well. So it's growing. Right of use assets, in process, research and development. So it's got another $9 million there. Total assets shown there is obviously increased substantially. Current liabilities or total liabilities is very small relative to that cash injection. Additional paid in capital. Stockholders' equity. All right. We'll go on. We'll see the income statement, or it's also known as statement of operations. Let's see if this business is making any money. And usually we would have a breakdown here of the top line of the business, which would be the revenue. So money coming in from sales, for instance, and it goes straight into operating expenses. So I can see that the business isn't making any money at the moment. They're spending money on general and administrative. So they've gone from 7 million the previous year up to 30 million. Research and development. So if this is a relatively new business from either around 22, that we would expect them to be investing heavily into research and development, which they are. They've used that money to plow it into that. And so we can see the loss from operations. So 10 million the year before and 46 million is what they spent last year. So net loss. Let's go and have a look at the cash flow statement. Actually, we can see here our common stock issuances. So for the previous year, they gave out, sold some shares to market, and common shares, common stock issuances is 8.8 million shares for a total value of what, 206 million. And so from what I can read here, the business has gone back out to capital markets, giving out some additional shares to bring in more money into the business so that it can fund it for the time being. Let's go and have a look at the cash flow statement just to see where that money's been allocated to. So 40 million is that net loss that comes through from the income statement. We can see equity-based compensation which is a bit of a yellow flag at the moment because I want to go back into that and see, all right, well, why are we already paying equity-based compensation out for a business that hasn't actually turned a profit, considering $200 million has just come into the business and then 10% of it has walked out the door, which is just effectively transferring wealth from one person to another. Amortization, depreciation, R&D, deposits, pretty run-of-the-mill. In-process research and development. So trying to put this in the investing activities portion of the business. And property, plant, and equipment. So that's cool. Money that they brought in is going into there. There's those stock issuances and offering costs. So this is where it actually comes in our financing activities, and they're actually funding the business. So they've gone out to market and they spent $15 million in the process to raise this $206 million from selling those shares. So it does cost money to get the money back in, whether that be the underwriters, etc. Proceeds from exercise of warrants and cash in the bank. So net increase. And at the end of the year, they're left with $203 million. All right. So something else that I'll want to have a look at, we've got management that we really want to have a look at. I didn't actually go back. I'll need to go back and check their skin in the game. I got a little bit of their experience. I can already see that the business hasn't mastered its customer. So they haven't got a product in the market yet. And so what that means is there's still a long road ahead for a business that's taking a new product, getting it to the stage where it is actually, say, fabricated, and they've built these micro reactors, have them actually tested, have them sold to a customer, and then have them reliable and making a profit. So it's easy for a business to just have a product, but if that product continuously loses the money, that's not a good position to be in. So especially on these early stages of business growth, you really want to make sure that we've got a really experienced management team that know what they're doing in terms of bringing new, highly specialized products to market, especially in a very heavily regulated industry like nuclear energy. Okay, so summary compensation table, we can see that the president got $500,000 and then earned another over $500,000 for a bonus, and then options awards of $6 million, and then stock awards of $4 million, totaling $11 million for last year. And James Walker, the CEO, looks in this table, unless it's been separated out, that he just got $300,000 bonus, got $6 million in options awarded, $2.5 million in stock awards, and took home, with other compensation, and then took home $9.3 million. All right, so as I said, it's a bit of there's a long way for this business to go, and the best managers have long-term, they want to see and make sure that the advantages of the company go as far as they can. So people like Jeff Bezos and things like that, they would be as frugal as possible and trying to make the money that they got in from investors and use it as wisely as possible. It's kind of a bit of a red flag to see these guys taking that much money out of the business. Like I said, they've spent $15 million to get $200 million back as an investment in the business to fund it for that time. And then they've effectively spent $20 million of that again on themselves and the rest of the management team who are getting these options awards and stock options. So there's 10% of their funding, which may have been close to half a year, another year, just in case they don't get the revenue that they're expecting, or need to dilute other shareholders again because they need to go back out and sell more shares. So let's just see how much of a percentage of total stock that they own, which is usually in this section as well. Just keep scrolling. Talks about their awards and the reasons why. But the incentive plan, purpose, eligibility, administration. There's a lot here in administration. Really want to see that there's something that ties them down to a clear and understandable long term. So is it simple or is it really complex in terms of what they're actually chasing? Okay, so performance of the award, performance criteria for a performance award may be based on the attainment of specific levels of performance of the company. Yada, yada, yada. All right. May include, without limitation, any of the following: net income, basic or diluted earnings per share. Wow. And then all the way down to personal targets, goals, and completion of projects. So up to X, I. All right. So that's, I guess it's a coverall, but it doesn't really give me, if I was trying to invest in this business as a shareholder, anything clear that says this is exactly what the strategy and this business is focusing on. For instance, if it was product to market or positive cash flow at X date, which is like, where they're actually working towards, then that would be pretty clear for a business in this part of its life cycle. But there's a lot of things there and doesn't really give me anything really to go on. So let's just see if we can find who owns what. We've got more breakdown here of who's getting what in terms of more shares. But nothing in terms of skin in the game. Here we go, security ownership with certain beneficial owners and management and related stockholder matters. All right. So 5% or greater is I Financial Ventures Group, which represents 10 million. Limited partner. Reporting stock issuable to JU upon the exercise of the vested options. Is the sole shareholder and director of. Okay. So Jay is also this guy or this legal entity. And so he all collectively owns a little over 40% of the company. The CEO, James Walker, has 1.3 million shares of common stock beneficially owned and 2.5% of the overall company. So really, Jay has got significant skin in the game. If anything, it sounds like him being one of the original shareholders and founders of it has put a lot of money into the business as well to get it to where it is. But in terms of long term and the business not actually turning a profit yet, it doesn't tick the boxes for me. So there's some things like, can I tell what's going to happen in the future to this business? Not really. There's a lot of things that still need to go right for it. And it's not in a business model or an industry where things are pretty straightforward. Like there's a lot of red tape that this company is going to have to go through before it can get to the stage where it's cash flow positive. Is it a great business? Well, it may be in the future, but it may also just die. Can I trust the people who run it? I think Jay's got a lot of skin in the game. Like he's invested a lot of money. Can't really tell without going back through that entity and then having a look at where that money's been funded from, if it is just from Jay or if it's him looking after it on behalf of other people that have put money into it as well. And we don't really need to go into is it cheap, etc., because it hasn't ticked these first three options. They expand on here. Is it competent or competency? Do I understand the business? I'd go into it further and want to know more if we're at that stage where it actually passed this mastery. It doesn't have a moat around it at this stage, which for this kind of company, it would be the intellectual property. And then the management. So in terms of alignment, rational, I think it's a bit questionable in regards to those stock issuances and things like that. Obviously, in a business at this early stage, it would be nice for the business to be going, hey, we're actually going to not take that out. We're going to vest these in a much longer time frame, so i.e. 5 years' time, so that they can make sure that capital runs for as long as it can. So this is just a resource that I've produced to try and make it easier for myself to use frameworks that I've learned from other investors as well. So that, and I'll just give you a bit of a breakdown. So if there's any other questions that you guys have or that you had when you're watching through this, leave a comment so that I can either respond to it or that it might influence the next live that I go and do and look at a specific business or try and look at different parts of the annual report, say financial statements and things like that in a different way. I read everything and try to respond to everything as best I can. So put them in, I'd appreciate it, and we'll get back to you. If you're interested, I've done another one on nano nuclear, which is another video on the channel. So if you'd like to go and check that out or see a few more of these, click subscribe so you get a notification that when I'm going live. Otherwise, if that's all, go and check out this next video that's coming up because YouTube reckons that you'll like it. Cheers.